Wall Street's surging rally on Friday night proved short-lived as investors were confronted overnight by more evidence of just how fragile the recovery is. Separate reports showed US personal incomes actually fell in real terms during July, and inflation was extremely low, raising concerns about consumer spending and potential deflation. Federal Reserve pledges of support seemed a distant memory, and even a number of multi-billion-dollar takeover plays failed to keep traders optimistic ahead of a string of key manufacturing and employment reports due later in the week. An hour into trading, the ASX 200 index is 31 points, or almost 0.75% lower for the day, as investors respond to the negative lead from Wall Street overnight. In particular, our resource sector is under early pressure, with BHP Billiton down over 1.5% to $37.25, following reports that Brazilian iron ore giant Vale has cut prices by 10% in response to weak demand and rising steel inventories. And in other company news, shares in regional radio and TV station owner Southern Cross Media have risen more than 1% to $1.79 after the company reported an $82.7 million loss for the full year. However, that result was impacted by a $102 million loss on the sale of its US newspaper assets, and underlying profits actually climbed 6.8% for the period. Southern Cross gave a fairly upbeat assessment of its outlook, saying its TV stations have enjoyed a particularly good start to the first half of 2011. On the currency front, the Australian dollar has headed south in overnight trade and is currently buying 89.21 US cents. This is Tom Huxtable for Young Stockbrokers.